Hi everyone. Today's Thursday, May the 15th. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. Taking a look at these last 2 days, the opening range has almost been the same size in the E-mini S&P. Unlike yesterday, which broke both above it and below it, giving us a wide range of intraday megaphone behavior, this morning structurally looks different. We have high areas that now look as, it looks like clean resistance to me, 59.06. If we recover this, we're back to our long targets with that structural move up into 59.26 and then the implied volatility move 5,947. If we bounce into this 59.01 to 59.04 area and cannot get above 59.04, we will continue that short move into 58.65. That's the implied vol move from to below. We just tested it and are breaking out of it. Notice how important this weekly structural break is at 58.86 or so. Folks that sold options in the first part of the week really wanted to get back here above that area of 5886. If not, we're going to have to follow that delta down, and that brings us our new targets, opening range of 3 days ago, which is that 5865 to 5859. Expansion there sends us into this 50% pullback that came from the last formation of swing high to swing low, right? So that's what we're looking at. What is trend? It's mixed, right? Our 10 is down, our 63 is up to flat, our 100 is up, momentum is up. So my suspicion is short action at 5,900 to 5,904, or short action at the loss of 58.75, where we'll start running into those lower targets. Let's take a look at the NQ. Okay, for the NQ, we have this wave. Got a pretty big wave here. Let's make sure we see the trend so you can see the measure of the wave, right? This is a big wave, swing low, swing high. We're now inside of that rotation, suggesting a reversal of trend. Now, here's the thing. We came right into the 63. The NQ obeys that 63 very, very well, and we've begun the bounce. Just like yesterday's opening range, we broke above it and below it, but failed to recapture above it. So morning formations starting to look like a trend downward. Where's the ideal trade? 21,360, 21,240 would be the first target. And then the potential rundown into 21,128, right? We should have some sort of reflexive move that gives us a breath. Hard to say, but in my mind, as long as we stay below the low of the first hour of Globex, and that's at around 21,357, we're going to have a continuation short, right? Looking like trend underneath the 10, which is trending a little bit down in an upward space. Traders might call this a bull flag, but touching the 63, so there really are buyers sitting at around 21,180. Losing that zone sends us to 21,100, 21,060 implied vol move, and then 20,990. Here's the edge of the implied volatility move to the downside. That's 20,847. I like the bounces to sell this morning, and so I'll be looking for a short up at the 21,350 area. If per happenstance it doesn't give me that, the break of the support structure around 21,240 where I mentioned the long action would work best yesterday. It's going to turn into old support, potentially new resistance. Keep your eyes on those levels. They're very important today. Let's go to the YM. Still trending downward, underneath the 63. Downward trending 10, underneath the 100. This looks like a bounce is a sell, right? Lower highs, lower lows. That gives us a market structure event that is downward. The last wave test, 41,922. Notice the traders dipped right below that edge into the last swing low, swing high area to the left before that, and then it starts to hold. Where is my thought that this is going to run? Wouldn't be surprised if it came back into the opening range and filled this gap eventually. This is what I'm thinking. Bounces into 42,000 should give us a short. Notice this line at 42,025 looking like a lower high that potentially is moving to the south. So we'll see what happens. If it comes in and holds this zone, you could say to yourself, I think this is going to bounce. If you do, and you say, all right, well, I'm going to wait for 41,900, your stop is going to be underneath this break of 41,833. My thought is these bounces up here, short action, simply because that's relative trend, lower highs, lower lows, and ultimately I'm looking for us to get into this opening range candlestick from May the 11th. That takes us down to 41,670. Let's take a look at micro Bitcoin. Opening range formation, tight. As we know, in tight opening ranges, price action in the early part of the morning will break above it as well as below it. That's been combined. All three of the moving averages we watched converged right on this spot. We lost the opening range low, tried to bounce, could not get up over these moving averages, easily triggering a short below 103,400. Risk 103,670, and we moved right down into the weekly implied vol move. The folks that are trading the daily implied vol moves, they're getting shredded, okay, because the range expansion has been very big. But what we can notice at this juncture is that we are sitting inside of the swing high from May 12th to the swing low of May 12th. Price action could bounce, as it did on the weekly implied vol move at 102,000, heading up into 103,900. Okay? So, what do I like to do when something looks like this? I want to trade the edges. This business right here drives me bananas. We have a market structure break, potentially if it loses 102,000 and does not recover. If that's the case, it's going to stair step right back down to this zone sitting at 99,570. All right, let's take a look at oil. Last night we did another training on designing trade structure using the swing lows to swing highs. And one of the examples we looked at was what would likely happen at this particular range event at around 62, actually it was all the way up here, 62.70. And as soon as the market opened, my thought was high, lower high, lower high. This wave is the structural one that we're in the midst of, so we should go to the bottom of the range, and if it expands, we're going to go into the 50% to the downside. Literally hit it within 10 pennies, and it's bouncing. But what's it bouncing into? Resistance. So what's the trend? 10 down, 50 down but far away, 100 up to flat, What does this tell us the day is going to bring? Well, it's well outside its implied vol moves because of this opening candlestick formation. Could we bounce? Absolutely. What do you want to look for? 1, fails to head lower. 2, breaks resistance. That's where we're sitting right now. Sellers are more likely to come right in here and try to push price action down. If they can't break the low, it tells us we're going to move right back up into 61.56. Is this an attractive trade? Not really. We got cross currents everywhere, right? So I'd wait for a bottoming formation at the corner of the structure and see where it goes. This wick down here at 60.21 looks like a pretty good line for the chart to come into. If it loses it, it's back down here to 59.44. This is very likely going to move to the downside in my mind. So the bounces are sell zones. Where do I like to look for that? Structure break, edge of the opening range. I wouldn't love a short unless it got to 61.50, 61.91, or gave us a failed break and then a failed retest. So here is the failed break, dips down below, pops above, fails again, and then there's the failure to recapture. So that's what we're kind of looking for, right? We're looking for that kind of structure that takes us into continued selling. I am bearish on oil in general simply because of what I believe the backdrop is going on. So that's it. Let's go to gold. Oops, wrong contract. Forgive me. Okay. Beautiful trade for short action structure. Look, here's the wave. Swing low, swing high. Sits right here in this range. Market structure break on the 1 hour chart doesn't even give us real room to take the short, really. It just collapses. So what we have to do is wait for a bounce that can't get above 3,209. That's the low of this structure right here, 32.11. Barely comes into 32.05. So we could say, hey, that's a little bit of chasing. Yeah, it is. But move sideways. We can see, hey, I'm not heading higher. I'm not heading higher. I'm under the 10. The 50 is down. Excuse me, the 63 is down. The 100 is down. I have negative drifting momentum. I'm going to break structure. That's very likely. And there it goes in the opening range. Very tight opening range. We know that happens. We break the top. We break the bottom. We try to bounce very, very tightly underneath the 10, underneath the 63, underneath the 100. We have the stair step implied vol. It was 3,153. And then the next one, 3,123, literally bounced to the tick. Traders are still using the math to give themselves trading opportunities because of the volatility intraday. What do I like here? Recovery bounce to the top of the last market structure break. 32.11, 32.04. That could give me a nice short. Now, am I changing direction? Why, yes. So the goal action might be a short up here at this 32.11, but if it pulls back and holds the low of the opening range at 3,177, we'll have ourselves a buying opportunity. So two-way tape in gold structurally today. Let's take a look at SPY. SPY holding the lows, bounced right up into the implied vol move. I literally drew this last night. Just right up into 587 and is now trying to hold the edge. What's the edge? 583. If we lose 583, we're going to stair step down into the lower corners of the implied vol move. That's 580, also the weekly, right? We'll move those targets up into that area. What could we see? Well, my thought is a cheap short would be right up here at around 589. Just about 15 cents, 30 cents of a stop puts us right back down into the framework. We are battling at, hang on, what do I want to see here? Yes, we are battling at the top of the expected moves. And so this big structure is the one wave that we're staring down from a big picture formation, right? This big wave. And this one here that is literally just a day wide from swing high to swing low. I've ignored these gigantic wicks. You can measure them if you like. I just chose to ignore them. That gives us, if we lose 583, we head to 580 and then potentially 577. Let's take a look at the Qs. Lastly, pretty wide range. We've got a structural break potentially up over the top. Wow, that came into the implied vol move. Also, right up at the top here, we'll have a structural break if we get up over 519.03. I'm not thinking that's going to happen. If it does, we're going to move into 520 and then the weekly implied vol, 525. My thought is that we stay in this range, so I'm looking for the dips to buy. We have a potential topping formation. That's why I think the cheap short up there works nicely across all of the indices. But very important area for the buyers to hold right here, because if we cannot hold, we've got the break of the formation back into the old areas that are potentially highs that were resistance that could become support. Lower edges, $507. That's what I'm seeing. Listen, good luck today. Have patience, watch your size, and enjoy the trades. I'll see you soon.